Hi everyone, welcome to our channel. We are accounts bookkeeping business based in QLD, Australia. Please find disclaimer on screen. If this is your first visit to our channel, we would like to inform you that this video is part of a video series explaining GST Act 1999. If this subject is of interest to you and you would like to learn about GST Act 1999 in easy and interesting way, please check our playlist for this subject. This is video number 5 of GST series. In this video we will discuss divisions 189 and 190 from Chapter 6 Volume 2 of GST Act 1999. These sections explains exceeding the financial acquisitions threshold and 90% owned groups of companies. Please find this section in Volume 2 of Chapter 6 of GST Act 1999 from pages 167 to 170. There is link in description box. You can access free copies of GST Act there. We will discuss this video in following pattern. 1. A brief introduction. 2. Explanation of the ACT and relevant legislations. 3. Explanation in our own words. 4. Summary. 6. Key points. 7. A question and answer activity for you. Let's begin. A brief introduction. These sections are from divisions 189 and 190 of Chapter 6 Volume 2 GST Act 1999. We will discuss these two sections in this video. Firstly, we will look at Division 189, that is exceeding financial acquisitions threshold. This division forms part of Chapter 6, interpreting this act from GST Act 1999 of Volume 2. In this division, entitlements to input tax credits for your acquisitions, relating to financial supplies if you don't exceed the financial acquisition threshold. These entitlements to input tax credits are explained in this division for entities and members of GST groups. Second part of this video is Division 190 of GST Act. This division also belongs to Chapter 6, interpreting this act. Friends, Division 190 explains about 90% owned groups of companies and their meaning. Explanation from Act. Now let's have a look how GST Act explains these divisions, that is Division 189 and 190. Please find related information to these divisions on screen as we go through. If possible, friends, we suggest that you find time to read these sections, either on screen or from Volume 2 of GST Act 1999 in Chapter 6 pages 167 to 170. For your convenience, please find link to GST Act in description box. You can access this information free of cost on this link. First section of Division 189, that is Division 189 to 5, explains about exceeding the financial acquisitions threshold for current acquisitions, in general and for members of GST groups. Second section of Division 189, which is Division 189 to 10, explains about exceeding the financial acquisitions threshold for future acquisitions, in general and for the members of GST groups. And third and last section of Division 189, that is Division 189 to 15, explains about meaning of financial acquisitions. Friends, that was it for Division 189. Now we will have a look on different division, that is next division to 189, which is Division 190. We will see how GST Act explains Division 190 of Chapter 6. This division explains about 90% owned group of companies. First section of Division 190, that is Division 190 to 1, explains definition about 90% owned groups. Second section of Division 190, which is Division 190 to 5, explains about when a company has least a 90% stake in each two companies. That was it from GST Act for this video, friends. Explanation in our own words. Now let's have a look how well we can explain both divisions to you in our words. Friends, before we would start explaining these divisions in our own words, I would like to explain these in basic manner about some of the GST terminologies for now, used in these divisions. There will be more in-depth explanation about these terminologies in our future videos of this playlist. To get instant updates, please subscribe to our channel. We will explain the following terms in basic manner. 1. Input tax credits. 2. Financial acquisitions. 3. Creditable purpose. 4. Importations. Friends, input tax credit is a GST credit that you can claim back from Australian Taxation Office if you make an acquisition to run your business and that acquisition is not input taxed. Any acquisitions made for private use in business are not entitled to input tax credits. Friends, please don't get confused by input tax credits and input tax. Both are different terms and have different meaning. 2. Financial acquisitions. A financial supply is input taxed and has any other meaning given by the regulations. A financial acquisition is an acquisition that relates to the making of a financial supply, other than a financial supply consisting of a borrowing. For example, long-term lease, commercial residential purpose. 3. Creditable purpose. Creditable purpose means anything acquired to carry on an enterprise. In other words, business expense that is not input taxed. 4. Importations. Importations are goods you import for business, and you enter the goods for home consumption. Please note that you must pay GST on any taxable importations. Friends, now we will explain Division 189, that is exceeding financial acquisitions threshold. The division explains your entitlements to input tax credits for your acquisitions relating to financial supplies, if you don't exceed the financial acquisitions threshold. These entitlements applies to you even though financial supplies are input taxed if you don't exceed the financial acquisition threshold. Before we start explaining subdivision 189, we would like to suggest that please keep in mind few notes. This will make it easy and quick to understand division 189. Few terms mentioned in division 189 are meaning of 1. In general. 2. GST groups. 3. Current and future acquisitions. In general is referring to general individual enterprise entities. Members of GST groups is referring to members of a GST group. Current acquisitions is referring to next 11 months and future acquisitions is referring to next 12 months in a particular time, to the last day of that month. This current and future acquisitions are very similar to what we learned before for current and projected GST turnovers. In case you have missed it, we would like to remind you to please check video number 5 of this playlist. Friends, you are entitled to input tax credits for financial acquisitions only if these acquisitions are made for creditable purposes, which means acquisition made to carry an enterprise or in other words a business expense that is not input taxed. If your financial acquisitions for creditable purpose is or likely to be below $150,000 in 12 or 11 months depending on if it is a current or future acquisition. Friends, just remember that this entitlement of input tax credits is only for financial acquisitions for creditable purposes, not for all the other acquisitions and importations. An entity exceeds a financial acquisition threshold under Division 189. A. If your financial acquisitions for creditable purposes exceeds $150,000 in a particular time, to 12 or 11 month period, ending at last day of that time. 12 months for current acquisitions and 11 months for future acquisitions. And or B. If 10% of all other importations and acquisitions of an enterprise, other than financial acquisitions for creditable purpose, is more than $150,000 in periods mentioned before. For example, if your total acquisitions and importations are more than $1.5 million, then you have exceeded financial acquisitions threshold. Friends, financial acquisition thresholds applies very similarly to, in general and member of GST groups. Only difference is that in member of GST groups, financial acquisition threshold applies to the members of a GST group. Now we will explain next division of Chapter 6, which is 90% owned groups of companies. Division 190-1 and 190-5. GST Act views an enterprise, a 90% owned group. 1. When a group has 90% stake in another company. 2. Third company has at least 90% stake in each of two companies. For example, third company would have 90% and 90% stake in two separate companies to be considered as 90% owned group for GST purposes. Friends, under Division 190-5, a company is considered to have 90% stake. 1. If a holding company controls at least 90% of voting power in subsidiary company directly or indirectly. 2. If holding company has right to receive 90% of dividend, directly or indirectly, that a subsidiary company must pay to holding company. 3. If holding company has right to receive at least 90% of any capital distribution from subsidiary company, directly or indirectly. In other words, friends, for GST purposes, company is said to have 90% of stake in another company when a holding company has right to receive 90% control, 90% of total dividends and 90% of capital distributions, directly or indirectly in subsidiary company. Friends, let's have a look what we learned so far from Division 189 and 190. 1. Input tax credits for financial acquisitions only applicable to financial acquisitions made for creditable purposes. 2. Financial acquisitions threshold for creditable purposes is $150,000. However, this amount is subject to change. 3. For current financial acquisitions, time period is 11 months, and for future financial acquisitions, time period is 12 months. 4. Company is considered to have 90% stake where company has 90% voting power, right to receive 90% of dividends and right to 90% capital distributions in subsidiary company. Summary. Well, friends, we are almost there. This is fourth section of this video. We will try to summarize what we discussed in this video so far from Division 190 and 189, explaining meaning of 90% owned group and exceeding financial acquisitions for creditable purpose threshold. In summary, friends, we have learned 1. Exceeding financial acquisition threshold for current and future acquisitions, for both, in general, and members of GST groups. 2. Meaning of financial acquisitions. 3. Definition of 90% owned groups. 4. Meaning of having 90% stake. Key points. Friends, at last, in fifth section about key points, let's have a look on some key points we gleaned from Division 189 and 190 of GST Act. 1. You are entitled to input tax credits for financial acquisitions only if these acquisitions are made for creditable purposes, which means acquisition made to carry an enterprise or, in other words, a business expense that is not input taxed. 2. Company is considered to have 90% stake where company has 90% voting power, right to receive 90% of dividends and right to 90% capital distributions in subsidiary company. Question and answer activity. That was it for this video, friends. Now we will head into 6th section. A question and answer activity for you. Answering these questions will improve your understanding of this act. You can use this video or GST Act Volume 2 from pages 167 to 170 to answer these questions. There is a link in description box below. For a free digital copy of question sheet, please feel free to contact us. Question 1. What is financial acquisitions threshold for current acquisitions? 2. What is difference between current and future acquisitions? 3. What is meaning of financial acquisition? 4. What are 90% owned groups for GST purposes? 5. As per Division 190, what does it mean to have 90% stake in subsidiary company by a holding company? That was it for this video. If you have any questions in relation to this section, please don't hesitate to contact us. Please check out whole playlist about GST on our channel. Thanks for watching. To support us, subscribe to our channel.